Hey there, my name is Brian Krogsgaard, and what we're going to do today is just some market analysis on Bitcoin and talk about the correlation with altcoins, what we can expect over the coming days. So this episode is brought to you by Matcha. Go to ledgerstatus.com/matcha. You see it right there. It's a great way to trade using aggregated liquidity pools. So they just added Cream, for example, but whether you're using Uniswap or Mooniswap or SushiSwap or Cream, wherever the best liquidity exists, Matcha will help you trade tokens there. You can do wrapped Bitcoin. That's relevant for today's video. You can trade Ethereum and a whole bunch of other coins that they support out of the box. They're always building great features, and it's a fantastic user experience. Go to ledgerstatus.com/matcha. Try it today. All right, let's dig into this video and what we see in the charts, because Bitcoin's looking very strong, and we're actually seeing a return of an inverse correlation between Bitcoin and a lot of altcoins, including Ethereum so far, at least on a relative pair. When we look at what the primary levels are and we say, hey, where do these lines come from? Well, they actually come primarily from the weekly chart. So this allows us to say, hey, where were some important weekly closes that we need to pay attention to? We had a close back here at 10.2 that we used as support. We even dug down into this one here, which was a lower high off that March recovery at 9,700. And we had a weekly close back in the summer of 2019 around 11.5, and that's why this was an important level. This fake out above it, where we had a small close above, is what helped us push down into the level below. We didn't really thrust ahead. And I think, honestly, part of the reason there is we have all of this zone here, and there's a lot of dollars in there. That is a $2,400 zone and a 20% price increase from that weekly close to the weekly wick that we experienced really in a liquidity event on the up move from the bottom. I mean, we came off of the 3K bottom back there. And, my gut tells me we need to create some volume in that zone, because even if you look over here in 2017, we just did not spend very much time in that zone. If you looked at a volume profile, it would show something really, really similar as well, that this is essentially a big gap and it becomes a bit of a vacuum. It also establishes for us some pretty clear target ranges, and that's why I believe once we clear 12K, that weekly could be a significant thrust up. So quickly into 12.5, 13K. And really we start hitting resistance around 13.5 to 14K. And we may, what I'm really looking for is some kind of thrust up and consolidation. Something like that is really kind of what I'm seeking. But we're seeing relative Bitcoin strength in general after re-clearing this 11.5 level that was really important, and now we created a new level at 11.9 there. Now today is only Tuesday, so there's a lot that can happen. This is why you wait for weekly closes to figure out what's next. If we close the weekly above here, we're going to be looking at 11.9 as support for rebuying, if we must, or for getting in. What we've seen here, though, is going, level to level trading from one level to the next. And we're going to keep an eye on where our moving averages go. The white line is a 20-day moving average. The green line is a 200-day moving average. Same thing when we move back here. The white line is a 20-week moving average. If you combine these weekly levels with simple moving averages, you can get a pretty effective idea of what is the current trend, what should my positioning be, how should I approach this market. The 20-week alone has been pretty sufficient throughout the previous bull and bear market to give you an idea of what the trend looks like. And it would have turned you into a bull. You did get chopped here, but it at least gave you actionable triggers to when to be in, when to be out. and avoid significant losses on some of these if that's what you were trying to do. And now it gives us the opportunity as we, I believe, encounter a prolonged bull market to know where we might want to buy dips. Our bias, though, should be bullish based on the price action that we see and the momentum that we see, and that's what our basis is going to be. But what I wanted to show this mostly for is that in terms of weekly closes, we really don't have a lot. We have the underside of the weekly close in 2017, but in terms of the highs, we don't have anything until 16K, and then of course the highs around 18.8 was where we finished that week, and we spent very little time up here. So, yeah, so we have an opportunity here to really have some significant price exploration and volatility like this, especially positive volatility in Bitcoin, is not necessarily going to translate. Ethereum looks great if you're just looking at it in a vacuum on a weekly. It looks like a nice consolidation. But on a relative basis, it looks like it's giving up the trend relative to Bitcoin. So we talked about that 20-week on Bitcoin. We want to see Ethereum sustain this 20-week relative to Bitcoin. This is the ETH-BTC pair. So we want to see a bounce off this 20-week. And if we don't get it, we could return to the range lows. As low as 0.025 on the weekly. However, before we get there, kind of the barometer of the market, I like to see tests of, and they don't have to be exact. It doesn't have to be a perfect tap of these 200-day moving averages as well. And I think that would be end up lining up right around this previous high as well. And that's how, if you look at, trading levels, or you look at momentum indicators like trend following strategies, you're going to end up seeing confluence between them. So 0.028 to 0.0285, something like that, is on a relative basis where we could see Ethereum. And that's after today we've had a pretty clear breakdown of this consolidation. So, we may get some retest and then a move down. If you're in Ethereum, or if I'm in Ethereum, then that's where I may be looking to get out of that, because I think that there's better trades in Bitcoin. Sometimes those are going to be slower trades, but one of the important things about altcoins, Ethereum, and then to a much more significant degree, other altcoins, is to know when is the right time to trade them and when is the wrong time to trade them. And the wrong time to trade them is when you just feel like you're consistently lagging the rest of the market. Now, these are, I'm looking at Uni here, or if we look at Tezos here, like these are very weak relative to the strength that we see in Bitcoin. And I just don't want to be in these if I don't have to be. And I don't have to be. The liquidity is there for participating in other ways. Talk about Wi-Fi sometimes as a really, masterclass in chart patterns and TA. People said this Head and Shoulders was fake. It wasn't. It went down right to the prior consolidation supports, and now it's creating a really low moment, like a no momentum type of pattern, a descending triangle, which basically just means a series of lower highs and relatively equal lows that it looks like it wants to break down from here and go to the next area of consolidation. Now, a full measured move of, from the top to the bottom, extending that down, would be about a 50% drop and could take it all the way under 7K back here. And that could be the eventual target. However, there'll probably be some bounces in between. I would expect a bounce at 10K for Wi-Fi, and then, some other kind of continuation pattern down or bear flag or something like that before it moves down further. This is just, it's a sign of a token that is out of favor. If I took it out of log, you can see how it's even more severe. So log is an unequal scale on the y-axis. If I put it on an equal scale on the y-axis, it makes it harder to see everything, but you can see how much it truly lost the momentum of the market, and it yet still looks like it wants to break down. More importantly, if you look over here in our watch list, you can see just the sea of red on a relative basis, while Bitcoin shows strength. And that is just our sign that dominance is up pretty severely. So this is BTCD, or Bitcoin dominance. You can see there was a really clear breakup here on that consolidation, and essentially Bitcoin was showing signs, or the dominance was showing signs of, taking over, and then, Bitcoin broke up and went into this next level up. Now, does this mean alts could recover? Yes, it does. I mean, alts could recover while Bitcoin consolidates after its breakout, and catch up a little bit on those USD pairs, and catch up a little bit relative to Bitcoin. Another thing to keep in mind is these dominance charts are not as accurate as I wish they were, because they're relative to basically all altcoins that I think in this case is CoinMarketCap lists. And it's not so much like top 10 versus Bitcoin or something like that. And what happens is dominance continues to kind of weigh down as more tokens are created, and these, zombie tokens that don't have true liquidity, but technically they have a higher market cap. They show up on the dominance charts. So Bitcoin's probably actually a little more dominant than it even shows, because it's constantly battling versus all those new tokens that get listed. For the most part, there's opportunity in altcoins even when Bitcoin is strong, but it's harder and harder to find what's going to have relative strength. And sometimes it's just easier to take the trade that's more clear. The trade that's more clear for us today is to see, Bitcoin is at resistance. However, it has strong bullish momentum. And as we get these weekly closes over each levels, I want to be a relative holder of Bitcoin. And part of what I know is if Bitcoin impulses one way or the other, meaning it has high volatility in either direction, that's not going to be very good for altcoins in either direction. Now that's different versus where all the markets ran together not too long ago. But we are pretty clearly, in my mind, entering a period where Bitcoin is going to kind of control what's going on in this market. One other thing I'd like to mention before we go is how Bitcoin continues to align with the broader market, and specifically the dollar, or the DXY. It's a dollar index, which looks to be, after what I thought was a bearish retest here, looks to be continuing its downward move. And 93 is really quite the last leg for the Dixie before it goes down basically to 92. But the measured move off failing this pattern here is sub 90. That's why I drew that down here. And the lowest we've seen since really 2018, which, interesting enough, was what marked the end of the last Bitcoin bull market. So that dollar strength and dollar bottoming ended that bull market. So I think we could actually see multiple months of Bitcoin strength if the dollar continues to break down. I know that's getting a little cute with the macro trade, but that's what I think. That's what we've seen some evidence of, and I'll be really curious to see how that plays out. But I do think that that's going to be the prevailing correlation between Bitcoin and the dollar, at least on those large time frames. So this looks like it wants to break down to me. If it doesn't, then it'll give us an opportunity to buy dips on Bitcoin perhaps. But I am looking for relative Bitcoin strength. You can see in these consolidations, then it gives us impulses. And now we've got 3 strong dailies right as it's ready to break out. And I think it's a matter of time personally before we get a really significant impulse up, and likely in the near term into that mid 13Ks type of range, maybe even 14K, before we do some more significant consolidation. I'll be personally looking to buy knives, or whatever you want to call it, maybe some low time frame consolidations or reversals on altcoins after Bitcoin has that break up, and trying to snag some altcoin upside relative to the dollar while Bitcoin chills out for a little bit. I'm very bullish in Q4. I'm going to be a little wary around the U.S. election. However, there's some stuff that I've seen where there's just a lot of money on the sidelines, and even the contested election to some degree seems like it's starting to be priced in. So I kind of think that as long as we have a general idea that, one person is going to be the president or the other, close to election night, then I think money is going to start flowing back into markets. And we'll also continue to see, politicians agreeing that we need to print more money and that we need to bail folks out, right or wrong. And I personally tend to think at least some degree of targeted recovery help is probably warranted after the pandemic that we've seen and the damage that caused, especially to certain types of workers. Nevertheless, as we see that happen, as we see more stimulus, I think that's going to be bearish for the dollar and bullish for Bitcoin. And I'll keep trying to marry my narratives as long as it works. So far, it's working. That's what I'm looking at. I hope you enjoyed it. If you did, please subscribe, rate it, comment. Let me know what you think. I appreciate you being here. Check out our podcast and go to ledgerstatus.com/matcha to take a trade today. It's a really enjoyable trading experience, the best UX that you can find. All right, talk to you next time.